G'day everyone, Greg Canavan here. In today's conversation with Ryan Dintz, we're going to discuss in further detail one of the key recommendations we've made for our new money investor product this year. I hope you enjoy it. All right, so after the miners, we discussed DeFi and we had an interesting DeFi index for people to invest in. How's that been traveling?
So if you think about the progression of our investments, we started off with the big macro assets, Bitcoin and gold, and then we went to a safer way of getting into crypto, which was income, trying to generate better than you could in the bank interest. And then obviously we went to the infrastructure, which is Bitcoin miners, which was stocks. So again, something people are a bit more comfortable with. Then we did this DeFi report, and so far, the timing of it's not been that great. It's down a fair bit from since we released the report. And that's basically due just to that change in crypto sentiment. So it could be down about 25, 30% right now, depending on when you got in. Although that seems a lot. And if you're used to stock markets, you might be looking at, 20, 30% falls with, dismay. The thing about crypto is you can see those similar rises.
It's pretty standard.
Short time. It is standard. I know it takes a bit of getting used to. The emotional strategies you can employ for that is don't look for a few months. If you've got the Ember Fund app and you invested, don't look. If you're the kind of person that's going to worry about it. Two, obviously at the start, only invest what you're willing to hold for a long time. I think in the report we said it's a 2 to 3 year investment minimum. But it could be a huge investment over much longer time frames if we've got this thesis right. If you're a bit braver, again, these dips are when smart money tends to come in. So if you were looking to top up, these are the times to do it.
I was going to ask as well, with all these things that we're talking about, none of those, they're not recommendations for the time. Like anyone who's new to the service that is just listening to this now and discovering some of these recommendations we've made. We're talking an evolution of the financial system over the next 5 to 10 years. So it's not really going to make a huge difference whether you invest 6 months ago, now, or another 6 months time, right?
Yeah, 100%. And that you've got to have that long-term approach. And that is how you make money in crypto. The biggest single piece of advice I can give is think long-term, and it's very hard to go wrong. And I think with DeFi, so decentralized finance, you're talking about reinventing the rails of finance. And we talked before about how banks still use 1970s, programming for banking. DeFi is the free markets version of reinventing how banking and finance is done. It does it cheaper. It does it more efficiently. It's more open. It allows more innovation. It's so much better, but we're still at an early stage of it, and there are downsides to so much innovation. There are hacks. There are, nefarious types who are just there to make a quick buck. There are lots of scammers that come around. That's par for the course, but the underlying technology is going to reinvent finance. And the idea why we said, well, rather than trying to pick the winners, why don't we recommend you invest in a DeFi index, which automatically invests in the ones that are winning and gets out the ones that are losing over time, I think is a smart choice. I think the analogy we gave was, it's 1997 and internet's going to be big. You can feel it. You realize search engines are going to be a big part of it, but who do you pick? There was about 14 search engines at the time, and Google at that point was 2 blocks in a garage. You would never have known about them. Eventually, they came on to dominate. With the DeFi index, we're sort of trying to do that as well. We know the concept of DeFi will be big, but we don't necessarily know who the winners are. So this index, as a long-term investment, sort of does that natural process of cutting losers and adding to winners for you. So I think
when you talk about projects, we're talking about it has the ability to buy certain coins that represent these projects, and that's where the value accrues to, right? So that's how you get your returns from this fund.
Exactly. So it's an index of cryptocurrencies, and they're cryptocurrency projects that are across the board, and they're all looking at different areas of the finance industry. So, for example, one of the bigger ones is Aave, which is one we've talked about a while, and that's like a decentralized banking platform in a way. You can deposit funds and earn interest, or you can use deposited funds to borrow against as collateral. And you can do that in a matter of minutes. Mark Cuban, the famous VC from America, he just tweeted recently when someone was saying, what's the point in DeFi? He said, well, look, I can go on Aave, use my $10,000 worth of collateral and borrow $5,000 in a few minutes. Whereas if I want to do that through my bank, I've got to phone someone up. It might take me 3 days to get that same money. And that's a VC who I presume is probably gets access to money a lot quicker than us. And, 3 days compared to, 3 minutes is so far beyond of what the traditional banking system can cope with. And that is what DeFi is going to do. And so if VCs like that can see the benefit, the other thing that people might not understand is the interoperability of these DeFi protocols. So you compare that to banking, like you might be with the Commonwealth Bank, I might be with the ANZ Bank. I have to do most of my banking through the one bank because they know me. I can't really shift. If I do, I've got to reestablish a relationship, fill in a bunch of forms. Whereas with DeFi, I can use one protocol, potentially a security for another protocol, or I can interoperate them in various ways to do what I want to do. And I can do all this in a decentralized way, never having to deal with a human, just using the protocols that underlie it, do it from my smartphone. And no one can stop me. I can do it in minutes. It costs me, a few dollars to do it. It doesn't cost me, I don't need to take some time off work and do a 2:00 meeting appointment in a branch in the city somewhere.
Yeah.
So it's a complete paradigm shift, and it's coming. I think what's happening now, though, is there's a bit of poor sentiment. One, basically just because of the general price falls, but there are a bunch of people worrying about regulation of this stuff. And it's the old, fear campaign of regulators will kill it, government will kill it. I don't think they will. I think they will regulate it, but I don't necessarily see that as a bad thing. Give you another example, back to our friend Aave again. They've created a sandbox version of their decentralized protocol, which allows institutional investors to use it. So they've sort of segregated it from the main decentralized protocol, and they've made this a sort of copy of their existing protocol. But on this one, you have to do know your customer, and you have to adhere to certain ID regulations. And they're trialing that with actual institutions right now. And I think that could be a huge deal, because you could see institutions start to tap into and use these DeFi protocols in ways. First, they'll probably do that on their own assets, but next they will see ways of offering that to customers as well, and really enhancing the user experience.
So, well, I think what's really interesting about this whole industry, this DeFi industry, is that for so long, we said a couple of times that the banks are still using 1970s technology. And because they've been existing in monopolies or oligopolies, they've never really had the pressure put on them to innovate and to really revolutionize their services. Whereas this moving into the digital age has started to put the pressure on them. And going back to what I said about central bank digital currencies, I think that's why many of the Western nations, like, RBA, yes, we're looking at it. They're probably looking at it in conjunction with the bankers to work out how they do this to keep the banks a part of the system. So this has huge implications for creating efficiencies and creating better business models that, regulation or not, the market's going to move towards that, and the regulators will, as they always do, follow in some way. So, I think more than anything, this is the long term. Put a bit of money into it as you become, more accustomed to it and understand it a bit more. You can add to the portfolio as you deal with the volatility, that sort of stuff. But I really see this part of this is the real part of the new money system that I think is going to be most interesting and most explosive.
Yeah, definitely. I think my prediction is in the next 3 or 4 years we'll see an explosion of decentralized apps that build really usable products for consumers, just like how apps were built on the original smartphones. Now you're going to get dApps, which are decentralized apps, which means my 3 kids will potentially never have a bank account. They'll have various conduits to a decentralized financial network, and they'll be operating at the protocol level. And it'll be very interesting to see how the banks react to this, because like you said, that their reaction to these kind of things is usually, right, but how can we make money out of it? And I don't think they've realized yet that they can't make money in the old ways. Maybe there's ways they can make money in new ways, but that's going to take some radical change in thinking for them to see that. Maybe they buy some of these tokens for their own account and become, because remember, a lot of these projects are decentralized autonomous organizations. They're not traditional companies with a board and management. They're governed by people who hold the tokens. So a smart bank might think, well, hang on, maybe we can have some ownership of these tokens and influence the governance in ways that we can then contribute and help with. And you're seeing very smart venture capitalists already doing this on a number of protocols. They're buying heaps of tokens and then trying to shape policy to help them make a buck. It might be good for the project as well. It might not, but they're trying to sort of infiltrate some of these projects that way. And I think I can't see banks being early adopters of this, but you might see some forward-thinking financial or fintechs start to think like that and think.
I guess that's almost a risk, though, isn't it? Right, that where you can get the competitors coming in and buying enough of the tokens to influence policy or influence the project in ways that they think is best for them, but not necessarily best for the overall well-being of the token holders. So that'll be interesting to see how that.
But there's the thing with crypto, because most of it is open source, there's always this sort of Damocles hanging over their head that says, well, if you do something that the community sees as wrong, we'll just fork it and we'll move to a competitor, a clone, or something else. And so I say they'll try and do stuff in their best interest, but there are mutually beneficial outcomes that might suit banks and the projects themselves. Like, for example, banks can provide a lot of liquidity and a lot of trading expertise that might help some of these protocols become more efficient. So it's not necessarily. I'm just saying that by owning those tokens and trying to play an active part in governments,
they could buy into the system in a genuine way. Yeah.
And there are ways they can do that without necessarily making the project worse. And if they do that, then they'll probably find that there are things that ordinary people like me can do to just move to other platforms that do something maybe not quite as well, but it might do it as well as for what I need. So yeah, I think that's the way to go for banks, but I don't know if we're anywhere near that point yet. But what I do know is none of this innovation, none of this billions of dollars of capital that's gone into DeFi, none of this VC money that's continually pouring in. We saw more money come in 2021 than probably the last 5 years combined. That's not going to stop, and the technology is only going to get better and better. And at the end of the day, for someone who's not even into crypto yet, if they can get a loan in minutes on their smartphone, or they can pay for something straight away, or they can get an advance on their wages without having to do an application form at the touch of a button on their smartphone, that's what they'll do. And that is the world that DeFi is enabling. So we're going to go to that. What path that takes and what the regulatory environment is to do that, no one really knows, but it is going to go that way because that's how technology always wins.
Well, look forward to continuing to follow that in 2022. Thanks very much for listening. I hope you enjoyed that little snippet of New Money Investor. If you'd like to become a subscriber, please click on the link below. Thanks a lot.